Hey, this is Phil, and it's your Friday video update. So it's been a while since I've done a video, and I apologize, but summer just kind of got in the way for various reasons. So here we are into fall now, and back with an informative video that I think you'll find useful. I wanted to talk today about the 2016 year in review. Let's look back from where we started and where we are today and talk a little bit about what's happening in the future. If you'll remember, we started the year with predictions that the Fed would raise the federal funds rate at least 4 times this year. Well, to this point, we've seen 0 federal funds rate increases. There is some talk that they may do something in December. That remains to be seen. The prime rate is still at 3.5%, and interest rates, as a result of no Fed increases and good low inflation, have actually fallen. You may be surprised to know that in January of this year, the 30-year fixed rate on a $400,000 loan, the base rate was at 3.875%. I say base rate meaning before any loan level of pricing adjustments for credit score and so forth. In April, rates had dropped to 3.5%. By July, we saw rates drop another 0.8% down to 3 3/8. And today, the base rate on the 30-year fixed rate at $400,000 was 3.25%. Now, none of us saw that coming, or none of you would have certainly predicted that, since everything that we had been told was that rates were going to go up, and the predictions for some for 2016 were that rates would get between 4.5% and 4.75%. Instead, we've gone exactly about that much in the opposite direction, which has obviously fueled a great year for housing, and hopefully a great year for you. Speaking of housing, I wanted to talk a little bit about median sales prices. In January, the median sales price in the Washington, D.C. metro area for sales in January was $375,500. Now, granted, it was during a January we had a massive snowstorm, if you'll remember Snowmageddon, and not a lot of homes were selling, and maybe those that were maybe condos or smaller homes where moving wasn't impacting children in school, young couples or a single person, so the sales price naturally isn't as high. In April, the median sales price had gone up to $419,200, maybe signaling a few more families moving, but also better weather. By July, the median sales price was $435,000, and that's certainly the time of the year you would expect to see that, given that families can move in and out of the area and not impact their children in school. And now, in August, the median sales price was down to $420,750, but that was still a 2.4% increase over last August. So, good sign for housing, good sign for sales prices, and with interest rates, coupled with interest rates, buying potential is still at a very healthy pace. The other thing I wanted to talk about, and this maybe requires a little bit more chart, I'm going to put this chart up here on the screen and show you that this is the year in review, if you will, for the bond market. And if you've been following me, I talk about the bond market being the indicator of rates. You can see that where the bond started in January and where it's gone all year, and is a general massive increase, if you will. I point out Brexit because that was a kind of a watershed moment for the bond, and kind of flipped it it's on its head there. And since the bond after Brexit, we have not really seen the bond drop below where we were prior to Brexit, trading in a very narrow range, which has meant very stable, excellent interest rates. If I narrow in here on the bond chart, take a look, you'll see that there's Brexit again, and then the post-Brexit kind of bump. But again, after that, we've traded in a fairly narrow range, which has meant very, very stable rates. And I don't honestly really see this changing, even if we have a Fed increase in December. If you'll remember, after the last Fed increase, rates actually dropped, as I just showed you, throughout the year. So we're in for, I believe, another great fall and strong housing And moving into 2017, I certainly would once again tell you we do expect rates to eventually increase, but we've got a long way to go before rates are anywhere close to what would probably cause people to panic. Probably the biggest thing is going to be to change people's mindsets about where rates should be and can be going forward. But right now, everything looks great. I hope this helps. Please feel free to share this with other real estate agents you know who might benefit from this information. Send them my way if they'd like to speak to me in person. And share with your clients who are wondering where are things going from here. I think this will maybe ease their mind a little and help them with their home buying decisions. Have a great weekend, and I will talk to you next week.